Hello, everyone. My name is Basil Askari. I am the founder and CEO of a company called MidChains. It's based in Abu Dhabi, UAE. We're an institutional trading and custody platform, and we're backed by Mubadala and Lunate. I'm very excited to come and host this panel with you guys. So, unfortunately, one of our panelists is delayed, so we are hoping he will come in during the session. But to kick off, guys, why don't you introduce yourselves?
Perfect, thank you. And hi, everybody. It's great to be here. I'm Fernando. I'm the CEO of Nonco. Nonco is a digital asset trading firm focused on providing liquidity towards institutions.
I'm Nick Van Eck. I'm the CEO and one of the co-founders of Agora. We're a stablecoin infrastructure platform.
Awesome. So, as you might have gathered, we're going to be talking a lot about stablecoins. It's a subject that I think all three of us are very excited by and something that at least we do a lot of trading in as well with our clients. So, crypto markets have evolved rapidly in the last year. Institutional adoption, regulatory shifts, tech innovation, and a lot of new opportunities. From your vantage point, what are the most promising areas for investment in the sector today, and what are the macro trends investors should be watching most closely?
So I think maybe to take a step back, right? It's like, why are blockchains valuable? It's because you can move value 24/7, settle instantly, and have composable liquidity. So that is applicable to all financial markets and payment ecosystems. Where we are today, with sort of $200 billion in stables outstanding, what's got us here is mostly speculative crypto trading, right? So trading against BTC or other governance tokens on centralized exchanges, decentralized exchanges. And there's actually an interesting BCG report that came out a few days ago, and they said about 88% of transaction volume with stables is attributed to that, right? But there's a number of other categories that are much larger and non-speculative and really, I would say consistent flows. And so what we look to in the future of stablecoins is not just continued growth with centralized exchange trading of speculative tokens, but a lot of these non-speculative use cases, which is trade finance, FX on-chain, which is what we're going to primarily be talking about, cross-border payments, EM dollar demand, and really like just being core financial infrastructure for most of the world that doesn't have capital market or payment infrastructure today. And so those are the areas that I think are really interesting because they're very small from a dollar percentage of what's happening in sort of a stablecoin world. But if you look to the traditional markets, cross-border payment flows are tens of trillions of dollars a year, and we think stablecoins and FX will help bring a lot of that activity on chain.
Absolutely. So I'm just going to add a little bit there. I think that right now we're seeing stablecoin, as Nick said, for several use cases. If we simple it down, you use it for three main things. One is settling or funding exchanges for the speculative, let's say, use case. Second, it will be the payments. On the payment side, it's going to be remittance, cross-border payment, or trade finance. That has been growing year on year more than 100%. 7 years ago, I think 5% of all of the transactions in the blockchains happened with stablecoins. Right now, it's more than 50. Just to give you guys some nips here, in Brazil, 30% of the imports from China are paid through stablecoins. In Mexico, 8% of the remittance from US to Mexico happens on stablecoins. So that trend just keeps on going. And then the third use case is going to be yield-bearing stablecoin, which obviously Nick here is an expert on. So those three, we see that it's going to continue growing.
I totally agree, guys, and it's an observation I've made over the last couple of years as well in the UAE, where we've seen non-financial corporates actually really adopt stables for cross-border payments in large transaction sizes to settle payments, other transactions that may have nothing to do with sort of investments in finance, but rather just supplying goods and services. So, since all of us here are quite invested in the stablecoin infrastructure for emerging markets, at least to a certain extent, and helping enable this, when you guys are essentially, what are the biggest barriers to stablecoin adoption that you might see in the emerging markets in particular, and how do you think platforms will have to overcome them? And then the second part of this question is, for the investors essentially looking at this space, where do you think there is value in stablecoin ecosystems over the next 1 to 2 years for them to tap into?
I'll answer the first one and let Nick answer the second one. So on the first one, what we see on emerging markets, it's the lack of liquidity, right? So if we go back 5 years ago when Facebook was trying to enter the market, the first thing that they did is they started partnering up with local exchanges, right? Fantastic, that went nowhere. Over the course of the last 5 years, what we've seen is there's a lot of new movement on stablecoins, new stablecoins, but also a lot of fintechs and Web3 that have started to utilize this for cross-border payment. What never really changed in those 5 years is the core infrastructure of the liquidity around the local currency towards in and out of stablecoins. That is something that right now we're trying to tackle so these businesses can continue growing. For example, Bridge, right, or Conduit, any of these firms, they cannot satisfy the demand that they have with the current liquidity that the local exchanges have. And why is this? It's because of compliance reasons, right? No reputable market maker will be providing their liquidity in these retail-oriented exchanges. So that is a gap, and we believe that that's going to be solved very, very soon.
And maybe to just touch on some of the other things, it's tooling right in comfort with the technology. Better dev tooling, better tooling for businesses to actually get comfortable interacting with these assets, right? And so that's something that we're working on as well, is not just building at the issuance layer and the infrastructure layer, but also the application layer, right? And so if you're a business in an emerging market or an application, giving you the ability to feel comfortable moving fiat in and out of stablecoins or having a place to store those assets, right, that feels very familiar and is the Web2 experience. And could you repeat the second question that you had?
Sure. So as far as untapped value for investors in the stablecoin ecosystem over the next 1-2 years, where would you see that value is?
I would say what you're going to see over time is the verticalization of the issuer and the acquirer. So one of the reasons that we started out as an issuer is we think it's the most strategic part of the stack because you can kind of control the costs of everything downstream of you. And by being the central bank, so to speak, you will be the most capital efficient player in that market, whether it involves lending or trading of assets against your asset because you can print it instantly. You don't have to sit on inventory. And so I think obviously being an issuer is one of the most interesting areas to be.
Me? Okay. First, I want to say a big sorry to everyone. Getting here is a beautiful place, but finding this place is like finding Dory. I almost went to take a master's in Oxford because I was like, wait a minute, this is Oxford? Wrong place. So apologies for that. My apologies. Quickly, my name is Jason. I'm from StraitsX, which is a licensed stablecoin issuer by the Central Bank of Singapore. I think the question was about how we can promote, where do we see the market in the next 2-3 years. Rather than answer that in a numerical way, I like to maybe answer it in a way where on the macro level, today we see a report by the State of Stablecoins market, which states that the amount of stablecoin transactions in the year of 2024, February till February this year, has reached more than $32 trillion. By way of comparison, the amount of transactions that have gone through Visa for the same time period is about 15.3 trillion. That's about half. Right? And the number has actually dwindled by another 1.1 trillion over the past year. So where does it kind of tell you how the transformation has become in today's climate? The other thing I want to share is that here in Singapore, does anyone know where Singapore is? Wow. You guys are an educated crowd. When I was in my previous one, I asked how do people know where Singapore is? They say it was part of Wakanda, which is Wakanda, right? So I say, okay, thank you so much. But in Singapore, we issued the very first stable coin for the Singapore market called the Singapore dollar stable coin in 2019. Today, at the start of this year in 2025, the stable coin has been the 4th or 5th largest non-US dollar stable coin in the world. So for a country that is supposedly in Wakanda, to issue a stable coin that is the 4th or 5th in the world, that tells you a little something, right? But I'll share a bit more about how we do and how we promote the use of the stablecoin in the Singapore and the regional ecosystem. But in a large way, I would say that those two facts alone, Basil, kind of lay a bit of the groundwork for where we see the future to be.
Thank you. I totally agree, and I think just to touch on the first part of the question again on challenges, an area that we still see as a big challenge as a provider of stablecoins into the market is still access to on and off ramps. I think in many parts of the world, especially so in the Middle East, you have regulation that has promoted adoption of essentially Web3 crypto and innovations. However, it's definitely been held back by banking access that a lot of newer companies still continue to be challenged by. So more often than not, we find ourselves trying to help our clients open bank accounts than actually open wallets, which is interesting. So moving back to Jason, on XUSD and XSGD, the coins have become, pretty strong pillars, and you guys have had a very successful partnership with Standard Chartered to kind of enhance scalability, which is great, touching on the banking point. So what are the most effective strategies you've seen for driving mainstream adoption? And then the second part of this is, how do you measure the real world impact that you're having with these assets?
With these assets, as in?
As in adoption in general.
Adoption. Yeah. Okay. I'm still catching my breath. I think I did a Usain Bolt from the entrance here, so mine is kind of left there. But I would say in general, I used to be a banker, spent more than 13 years in banking, and Standard Chartered happened to be one of the banks I worked in. One of the slogans that Standard Chartered has is this line that says, "Seeing is believing." Right now, in the Web3 space, it's absolutely true. Seeing is believing. Like you said, opening a bank account is like getting a lady to marry you. It's easy, but it seems very difficult at the same time. So I would say that the nuance of how we woo and work with not only the banks of the world comes from the fact that as a firm, we started 10 years ago in the world of payments. So that was our DNA. And then we pivoted into stablecoins in 2019. So that was about 7 years into our making. We said, hey, let's try something new. And because of the lineage that we had in Singapore with the licenses, with the support of the banking infrastructure, I think we got to where we are today. And we got licenses from the central bank that has been first ever issued in the history of the country. So I think that kind of laid a very important groundwork for where we stand. And also we see that because we are not a bank, but also not a full, I would say, degen kind of player, we get the best of both worlds. So we get the banks who want to get a bit of foot in the market. And we also get the likes of the Web2 companies like Alibaba and Financial. In Singapore, we have this mega company called Grab, which is a food riding app similar to Uber. And they came to us and said, hey, we can't really touch crypto, but we want to get into crypto. I was like, what? Do you feel like you're having two wives at the same time? You don't want to be upfront about it? And they say, hey, we're going to have you to come forth and work together with you. And now we find ourselves using our stablecoin infrastructure to help Ant Financial, for example, which is the world's biggest, I would say, in Asia Pac, the biggest wallet holder, where users traveling to Singapore can use the Ant Financial Alibaba, Ant Financial Alipay wallet to scan and pay at any merchant point in Singapore, which is connected to the local rails. When you scan and pay, you transact every single transaction on the blockchain using the XSGD stablecoin. From the user experience, it's seamless. So the user who scans and pays from China buying a chicken rice has no clue what blockchain stablecoins gas fees are about. All they know is that chicken is tasting good. And when they scan and pay, the experience is as good as though it's a Web 2.0 experience. So we're able to actually blend in Web 3.0 infrastructure into the real world usage for people to buy chicken rice. Tourists that come to Singapore, we have 550,000 tourists that come to Singapore every month from China. So that's going to be a great story to tell. And that's also one of the reasons why the XSGD stablecoin has also kind of grown in terms of usage. Thanks, Basil.
Thank you for that, guys. So when we shift gears to talk a little bit about institutional investment, and often institutional investors will say regulatory clarity and trust with their service providers are one of the main reasons they would either consider entering the market or not. How are your organizations navigating, one, building trust with institutions, and two, managing across borders where you have quite drastically different regulatory requirements depending on where you're operating? And I guess this one is out to all of you guys, since we all operate in very different parts of the world.
Yeah, so for example, on the US dollar side, there's Circle, massive. There's Tether, that's massive. Outside of that, what we take a look at, it's counterparty risk, right? Who are you backed with? Who it's auditing you? And what are the controls in place that you have? That is why we feel very comfortable with AUSD, right? Because we understand the financial institutions in the background, right? So that's really, really good. With regards to the local regulatory frameworks, as you said, it is very tough to navigate. But I believe that we are now getting to a point that you're starting to understand in which markets you can operate and what are your obligations. For example, we are regulated in several countries. One of those is Mexico. Mexico, you got to do vulnerable activities reporting, right? In Brazil, you also have to do that same reporting. In BVI, there's the VASP, right? So we are now at a point that it allows industry participants to start operating in a little bit more of a structured way.
Yeah, I'd say you have to start with strong foundations, and that's your underlying custodian bank, right? So we use State Street, one of the largest custodian banks in the world. We have a $100 billion asset manager managing our reserves, and that's in a trust, right? So to Fernando's point on counterparty risk, we are very, very, very low, right? And so that's sort of step one of making people feel comfortable. Step two is the team. So our whole team has financial services backgrounds. One of my co-founders was the head of global operations at Galaxy Digital, and so ran operations globally for a large publicly traded company. those things help as well. And then I would say beyond that, it's who else, in terms of like a global regulatory stance, it's, how have you, worked in that environment before, right? And so we have the team that's done that, but this is an evolving environment, right? And so you have to get licenses where you can. There's not that many places today where there's clear licensing regimes around stablecoins. Bermuda, Singapore, the UAE are a few of them. But even in the United States, there's passage of legislation that should be happening, but that's not going to affect for at least a year or several years, right? And so it is a bit of a cat and mouse game with regulators in terms of what's going to come down the pipe, but you want to be building for that future, and so we did from the get-go.
Southeast Asia is home to 700 million people. And I think that by itself, in terms of the sheer number and also the fact that Southeast Asia, if you look at the number of currencies that we have in each part of Asia, it's very different from the EU, right? Or this part of the world, where there is often a common denominator. But in Southeast Asia alone itself, just because of the nuances of the central bank regulatory environment, only less than 15% of Southeast Asia's currencies are freely open to the world. The rest of it is controlled by the central bank. And using that as a barometer of stake, you would see that the regulation towards stable coins as a whole is also very fragmented. Just yesterday, we heard the Hong Kong government just passed the stablecoin bill, right? And it was a phenomenal thing that happened for Hong Kong. Singapore is going to be passing its own stablecoin regime in the next, I would say, few months to a year, since we just had our parliament reshuffle and also the elections. So that's going to come, right? We see countries like Thailand, like the Philippines, and also Japan, also rising up to that notion of having more regulation. But I want to take one step back, because it's very easy to say what we try to do on our own country. But like the gentleman have mentioned, whenever the US makes a move, the whole world kind of responds. So I would say last year, in 2024, in the Singapore banking infrastructure, all the American banks were kind of like, we don't want to touch crypto as much as we think we should, because our president isn't very hot on crypto. But the moment President Trump came in and saying things like, I love Bitcoin. Bitcoin is the really great thing, folks. It's a really great thing. You're a great person. Thank you so much. We're going to make Bitcoin great again. Thank you so much. Just things like this really kind of like spiral things off hand. Next thing you know, the top banks in Singapore are like, come on, let's have a chat. Let's have a chat, right? And I think in the next 4 years at least, if you're in the Web3 space, in the stablecoin business, you got to ride the wave. You got to go where, the US is kind of leading towards, and it's very important to make sure that you follow those trends at least for the next 3+ years, right? I'm not too sure what's going to happen beyond that, But at least in Singapore, the government, the stablecoin folks like us, we are watching that space extremely closely. You could work 10 years in the stablecoin regulation in Singapore, but all you need is just one sentence from someone up there, and then boom, right? So, quick download.
I couldn't echo that statement more. I think from our experience, at least just to see institutions begin to adopt, we've seen the sovereign funds like Mubadala, Lunate, ADQ invest in equity in different businesses. But this is the first year we've actually seen them begin to spot trade. And for example, Mubadala bought its first real Bitcoin just a few months ago. And so that was an exciting development to see versus, for example, the stance that was taken many years ago. And I think a big driving factor there is the US politics. So moving on to where we are today in sort of the development curve of the sector, we're seeing increased convergence between traditional finance, fintech, and crypto-native firms. Looking at this, how do you view the competitive landscape? Is there going to be consolidation? Do we think that specialized platforms or more general platforms are going to thrive? And is there a place for opportunities to exist across the spectrum? What are your thoughts on that?
Yeah, so the way that we see it right now, it's all about scalability, right? So the fact that right now people are trading on two separate states, so you have fiat, then you have stable coins, and trying to merge that across multiple jurisdictions is very, very, very tough. What we're working on is how do we empower local stable coins to merge into the demand of the US dollar denominated stable coins. We've built something that's called the FX on-chain protocol, which essentially what it does is when the client or when the counterpart sends us the local fiat, it automatically converts into the local stablecoin so it can be sent out to the unhosted wallet. The unhosted wallet, in return, what it's going to do, it's going to receive pricing from our oracle, which comes from our matching engine. All of these steps, the only thing that we did is scale our operations, right? If you want to be serving and providing liquidity all across the world, you need to make sure that it is scalable. Now, on the flip side, people have scaled before, but by hiring 10,000 people, right, and having a bunch of developers. Right now, you're able to do that in a most cost-effective fashion, utilizing the blockchain. So that is what we're excited about.
Yeah, I would say, where did this go? I think there's probably 5 to 10 global US dollar issuers, like a USDC, USDT. That's what we're aspiring to be as well. And then I think you have, where you have global liquidity, global utility, it's accepted in most places. You probably have a very, very long tail of other dollar-denominated stablecoins, many of which we're actually powering. So what's become really popular with us, which is in contrast to the Paxos model, is having folks build their own stables on top of AUSD, which helps grow our own network, but then they get to tap into all of our integrations out of the box. And so we have some of the largest gaming ecosystems in the world, some banks and EM markets, as well as entire networks themselves that are white labeling our stablecoin now, and they don't have aspirations to be a global liquidity layer. They just want to have a customized US dollar for their users where they're earning some of that float income. So I think you see a very long tail of those. And then I think non-USD FX will probably be the smallest segment. A rough way that I think about it is, what does global trade look like today, right? About 65% of global trade is in USD. There's a large chunk in the euro, and then you have, renminbi and yen, and that's kind of where I think things will shake out. Because the big demand driver that you have for USD stablecoins that you don't have for non-USD stablecoins is EM dollar demand, and it's the global reserve asset, right? There's about $13–15 trillion in euro dollar deposits, but those are US dollar deposits in non-US banks, right? You don't have that anywhere else. If you come to the United States, no one's holding euros, no one's holding yen, right? But if you go to places like Argentina, Turkey, Singapore, people are holding dollars, right? And so I think the US dollar stablecoin market is, probably 1,000x greater than the euro market will be.
I want to maybe answer that question in relation to foreign exchange. The foreign exchange market that is monopolized plus manipulated, you get monopolated by the banks. It's a multi-trillion-dollar industry that is moving every single day. Even here in London at Canary Wharf, right? You get so much of that foreign exchange flow coming in. The banks are going to defend this market as much as President Trump defends the donation from Qatar. So it's a very sensitive topic, right? But at the same time, I think what we have done also with the likes of our Web 2.0 customers and our partners is important because you're becoming that bridge to allow a lot of these players to come in. The other thing that we have also done is really build that foreign exchange infrastructure on DeFi. And I'm very grateful and thankful for the folks in Avalanche, whoever is here, for really helping us to get on Avalanche and also helping us to not only be on Avalanche, but to launch liquidity pools on things like Faro Exchange and LFJ, where today we have 2 liquidity pools, one for USDC against the XSGD stablecoin that we have. And that's seeing about, on average, I think about $500,000 of liquidity or 24-hour liquidity on a trading basis for one of them and double of that for another exchange. So that itself may not be big in the trillion-dollar sense, but it's a thriving and moving economy where you see DeFi come into this space to try and tap on how lucrative and how sensitive foreign exchange can be. So it's a very interesting space that we are seeing growing every single day. And with the support of the community, the governments that we mentioned about, Avalanche Foundation and some of the foundations of the world, together with the banks, it's going to be a matter of time that the world collides at the center point. And I think we are very excited to be there because we feel that the way forward is if we work together and we work together in a way that benefits all across the board. So
I completely agree. And I definitely echo the statement. So I guess just to close things off, since we're almost out of time here, in one sentence, each one of you, how would you describe in your view, the most overlooked investment opportunity in the crypto space right now? And what are the biggest risks investors should be aware of in brief?
So risk will always be counterparty risk for ourselves, right? So everything from a bank to an issuer to an exchange to a service provider, counterparty risk is always the most overlooked thing. What gets us most excited is the cross-border payment and the FX infrastructure.
Yeah, I was going to say non-speculative stablecoin flow, right, which is FX and cross-border payments.
Not all stablecoins are made the same. And just like President Trump saying, stablecoins and stable geniuses, you got to make sure that both of them are on the same page. And if you're on the right side of the page, all the best. Thank you, Basil.
Thank you, everybody.